Hey everyone, it's Chris and welcome back to the channel. So when we talk about financial independence or when we talk about retirement or even retiring early, we all know we have to do this via our investments. Relying on Social Security is just really untenable, and just letting your money sit in cash means you're losing purchasing power every single year. Now, investments can mean a lot of things to a lot of different people. It could be things such as buying rental property, buying individual stocks, or even if you're really into it, crypto trading as well. But in this video, I'm going to talk about the financial instruments I'm using, why I'm using them, and how you can use them as well. But before we get started, what I'm asking you is go ahead and give that like button a click. It would be really, really helpful for me. And if you'd like to see more videos as I do these and get notified, go ahead and click that subscribe button and you'll get notified when I upload new videos. So let's be realistic. I'm investing in stocks and I'm doing it in multiple different ways. And whether you want to invest in stocks or not, it's up to you, but you can do this through mutual funds, through ETF, buying individual stocks, and even doing things like buying calls and puts or selling calls and puts or doing different straddles. There's a lot of different ways you can use different financial instruments. And they'll have the pros and cons. And what you're going to need to figure out is, one, what works best depending on your financial situation. What type of time do you have? Do you have what type of tax situations you're in? What type of accounts are you doing these in? For the most part, my family and I follow two distinct investing strategies. The first one is we do the traditional FIRE index investing, buying low cost individual index funds, and then in other cases we buy what is called the dividend growth model, buying stocks where the dividend is growing year over year. And so let me explain to you where we're doing each one and why we decided to do what we do. So in my retirement accounts, I primarily use index mutual funds. First, it's the least costly option for investing. And if you look at how the indexes performed, I've gotten anywhere between 11 and 29% returns on my investments in those retirement accounts over let's say, the last 10 years. In addition, because it will be 10 plus years before I can start withdrawing from my retirement accounts anyway, I'm not worrying about market corrections here or there right now. So I have a very long-term time frame in which I can do those investments. And there's multiple companies. A lot of people like Vanguard. I personally kind of like Fidelity and Charles Schwab. I think their funds are probably some of the least expensive ones to run, and I like their technology a little bit better than Vanguard, but I do use some Vanguard funds as well. So the second area where we are investing is we invest heavily into an HSA. We've over the last couple of years have done high deductible insurance plans that include an HSA. And the reason we do high deductible plans is, first of all, it's just us. We don't have any kids that we need to worry about. They're always going to the emergency room. And two, we're in pretty good health for our age. And so, if it gets to a point where maybe, just maybe, we have to go to a higher plan, we'll think about that. But for right now, we are maxing out our HSA because of the triple tax benefits. And because of that, we're allowed to invest in mutual funds. And in that case, we are in 3 different Vanguard index mutual funds. Now, our cash accounts are a little bit different. We have multiple cash accounts. The one I'm going to talk about is at one particular investment broker. And we decided to go with what is called a dividend growth strategy. Now, in a dividend growth strategy, you are buying dividend paying stocks, and you are trying to buy dividend paying stocks where the dividend is growing year over year. And there's a lot of reasons why we are doing it. So first of all, for our financial situation, it's a lot different. One, in our cash account, I'm looking to develop cash flow over time. As we get closer to retirement, what I prefer to do is be able to get 4 or 5 or 6% yields on cost that I put into those funds and never have to actually sell the stocks. Second, because I'm a little bit worried about the sky-high valuations in the stock market right now, I like the idea of dollar cost averaging into more stocks if things collapse. And in addition to that, even if the stock price collapse, 99% of the time, the dividend does not collapse with it if you choose the stocks wisely. And third, another reason is our tax bracket. Taking short-term capital gains and unqualified dividends can really hurt us after tax. So the reason being is qualified dividends are taxed at a lower rate than your normal income. And hopefully this will stay this way in the future so that when our income is lower, our ultimate tax bill will be significantly lower. Fourth, the ability to borrow against the holdings. Now, I'm sure you can borrow against mutual funds, but I like having a portfolio of 50 to 60 different stocks that I could get a securities line of credit and borrow against if we ever had an emergency. This would keep us from selling income producing assets, the dividend paying stock, which would also help us from a tax perspective as well. Fifth, it's easy. I'm sure I can make a lot of money trading in and out of stocks, but I can make more money freelancing on the side than I could just from the dividend. So having a simple way for me to invest gives me more time to create income from creating my business and growing my additional business as well. And finally, we're looking at liquidity. We own one rental property right now. There's no liquidity to that whatsoever. So if we want to sell it, we're looking at minimum 45 days, if not 2 or 3 months before we can get that money out, and having to deal with the escrow and the sellers. It's just not very liquid. So ultimately, these two strategies have worked very well for my family. They fit our individual needs, and yours might be different. So go ahead and make sure you're doing what's right for you and not necessarily what's right for me. So how can you get started? Well, you can go ahead and open up an investment account at one of the mutual fund companies or a discount brokerage. I personally like Charles Schwab as well as Fidelity Investments, but you want to note if you want to do E-Trade, I have an account there too. If you wanted to do M1 or Robinhood, go ahead and get started. The great thing is most of these companies have zero minimums to get started. So it's not like in the past where you needed 1,000 or 2,000 or 3,000 or 10,000 to get started. So I would recommend you get started right away. So there you go. Those are the two investment styles that I'm using right now. So what is your plan? Are you going to be trading in and out of stocks? Are you going to be doing dividend investing? What about just growth investing or mutual funds? Leave a comment below and let me know what strategy you're going to be using for your investments, and maybe other people can learn from you as well. So I hope you like this video. Go ahead and again, give it a like if you can. It really helps me out, and I will see you in the next video. Bye for now.